I'm Catherine Ross, and I'm here live from the NYSE. Jim has the morning off, so joining me is Jeff Marks, Senior Portfolio Analyst for ActionAlertsPlus.com. Jeff, this weekend is officially September. So going into September with all the volatility that we're seeing, I mean, at 9:59 a.m., we're up 300 points on the Dow. What should investors be doing?
Well, yeah, I think if you think that there might be some volatility, you got to embrace it. You got to look for these big dips as buying opportunities. Those are times where you can scale into your favorite positions of the high quality companies that are trading at a discount. And then maybe when you see some strength, maybe that's when you start taking some off. I think that the market has kind of been stuck in this trading range for quite some time. So if you use the wide swings to the downside to scoop up some shares, then you can start peeling some off on a day where we're up 300 points.
Let's break down what's been going on in the U.S.-China trade war, because that is a large portion of why the Dow is up so much. So last Friday, China said that they were retaliating with tariffs. Then Donald Trump came out and said via tweet that he was ordering, and I'm quoting, ordering U.S. companies out of China. Then over the weekend, he said that he had second thoughts.
Yep.
And then this morning, we got another headline saying that China is willing to hold off on the retaliatory tariffs for the time being. That's a lot of news for a single investor. Should they even be watching all these headlines at this point?
Yeah, I think you have to block out some of the noise, right? You can't get too emotional when these things happen. I mean, just for example, if the market's pretty much it's back to where it was from when Trump started firing off those set of tweets. So if you were, if that was when all that happened, if that was your get out moment there, you've missed out on some pretty decent gains in the days since then. So I would say, again, you want to block out that noise. You want to use that volatility to your advantage. You can't be afraid to pick up some stock when it's down, because there are still, there's a lot of focus on the downside of things, but there's still plenty of things that can go right. Again, you mentioned these ease tensions, and do I think that there's going to be a trade deal right away because of this? Probably not. But it dries up the selling, and that's something that Jim's been talking to over at Action Alerts Plus, over on his show Mad Money. So it allows for a situation like this when the market can go higher.
So block out some of the trade headlines. I like that. But there is one trade headline that investors need to be cautious of, and that's the September 1st tariffs, which officially go into place on Monday. Now, a lot of the goods that were originally going to be tariffed have been delayed until December. But things such as like the Apple EarPods, they're still AirPods. Sorry, I don't know why I messed that one up. They're still going to be tariffed potentially. How should investors approach these tariffs?
You have to know what you own, right? So if you got to know what you own, you got to know what companies can navigate the tariffs, what companies can mitigate the tariffs, because those are the ones that will get a premium in the market. And the ones who can't, they're going to get discounted. So just talk retail, for example, right? The watch companies, Walmart, Amazon, Costco, Target, Home Depot, they all reported pretty strong really strong quarters. Tariffs, they're able to mitigate it, not really impacting their bottom lines. We saw those companies go higher. On the other end, the retailers who can't really navigate the situation well, the department stores, anything with a heavy manufacturing exposure to China, we saw from some of them, we saw them take down their earnings numbers and the stocks went down. So you got to know what you own. Can you own things that are in the crosshair of tariffs? I would still say yes. I think there's reasons to own an Apple still ahead of a 5G phone launch. Some of the semiconductors too. I look at NVIDIA and gaming coming back, and that cycle will be very strong for them. So I mean, you could still own some stuff, but if you're too afraid of the tariffs, you got to know what you're buying.
And you made a point about retail. Now, I want to go back to the U.S. and stick on Burlington, which reported earnings this morning. It's real money stock of the day. Yeah, it was a great quarter. What are you watching in it?
So Burlington Stores, it's an AAP stock. We own it over at Action Alerts Plus. We bought it not too long ago, and this is probably the name we were scaling most into whenever there was these tariff-related headlines. So love the quarter, fantastic. The most important thing we're going to talk about more on the AAP show that we're going to do after this. But I would say the most important thing to the quarter was the return of the comps, because first quarter they did 0.1 comparable same-store sales. Part of that was weather, some kind of they were kind of in the wrong allocation in some of the tough ladies in the ladies category, which has just been tough in retail in general. But we saw 3.8. We saw 3.8 this quarter, and that's well ahead of guidance. That's well ahead of what consensus was like 1.9. So return of the comps, and the second half guidance was good comps too for the second half of the year. So they're back on path. Very strong quarter. Very strong quarter.
I can't wait to dive more into it over on our daily rundown show on actionalertsplus.com. And guys, of course, it is Real Money Stock of the Day, as I said earlier, so you can head over to realmoney.com for all the analysis that you need from our experts. Now, Jeff, I want to wrap with Tesla. Now, they just announced that they are launching Tesla insurance, and they believe that for Tesla owners, they can cut rates by up to 30%, which is a huge amount to cut. Should investors feel good about this?
Yeah, so it's funny. They launched it, and then, as we saw earlier, there was some type of algorithm problem, I guess, with how they were quoting the insurance. So they kind of had to pull it back momentarily. But I mean, look, with Tesla, you got to appreciate their willingness to think outside the box. They're coming up with ways for people to buy their cars, and the product is great. And they're doing all these sales without any advertising spending, right? You don't see commercials for Tesla, so I admire that completely. Should you bet big though on Tesla? I still worry about the balance sheet. I still worry about the cash flow. That's just my personal opinion. Again, it's a great product, great car. It's a reason to buy it, but I still have reasons. I still think there's plenty of reasons to be cautious about it. So, but again, it's a cold stock. So I mean, I wouldn't. You don't want to get ahead of it. You don't want to get behind. It's a tough short. It's a tough long. Too hard of a story for me.
There we go. All right, Jeff. Thank you so much for joining us. Now, guys, if you're on TheStreet.com or on Facebook, we are now switching over to our Action Alerts Plus Daily Rundown Show over on ActionAlertsPlus.com. And, of course, in case you are playing fantasy football and you want to tune in, we have a live show around 10:45 this morning on BullMarketFantasy.com. You can follow us at BullMKT Fantasy on Twitter.
I'll be listening into that. I have my draft coming up, so I got to hear all of Bill's insights. That guy is smart. That guy's a genius in fantasy.
Bill Enright and I will be co-hosting the show, and as he just said, he is a genius at fantasy. I'm excited to see what he's got to say, but he's got some commandments for fantasy football players, so it's going to be helpful for you.
Yeah, absolutely.
All right, guys, I'm Catherine Ross, and I'll see you tomorrow.